Bonjour à tous, désolé, vous n'avez pas dû m'entendre. Donc, pour quelques détails pratiques pour la poursuite de notre webinaire, celui-ci est enregistré pour pouvoir le partager ultérieurement. Pour assurer une bonne qualité audio, je vous demande de vouloir couper vos micros pour éviter les bruits de fond. Les slides qui vont être présentés seront disponibles à la demande. N'hésitez pas à vous rapprocher de moi. La présentation va se dérouler en deux parties. Lucia Bever va nous présenter les points clés de notre rapport Sigma, publié en avril dernier sur les catastrophes naturelles. Et ensuite, Yann Bachmann et Martin Hotz vous présenteront nos solutions en assurance paramétrique et le fonctionnement de ces garanties. Nos intervenants vont s'exprimer en anglais. Vous pourrez leur poser vos questions sur la chatbox ou verbalement après chaque intervention. Donc, je vais tout de suite laisser la parole à Lucia. Lucia est Senior Catastrophe Data Analyst au Swiss Re Institute. Elle est l'auteure de 8 publications Sigma et en charge de la base de données Catastrophe Sigma, unique base de données internationale répertoriant les catastrophes naturelles et d'origine humaine. Lucia, the floor is yours.
Merci, Camille. Thank you very much and welcome also from my side. For those of you, the next slide. Perfect. So for those of you who are not familiar with the Sigma, this is just a snapshot of what Sigma is about. Sigma collects data on natural catastrophes and man-made disasters since 1970. They are not Swiss Re claims, they are industry claims. The data that we collect forms the basis of our annual Sigma publication, the Sigma on natural catastrophes and man-made disasters, which gives us an opportunity to engage with the industry on the lessons that we learned from the catastrophes of the previous year and reflect on some of the burning issues that the industry as a whole is facing on the catastrophe side. Next. So this chart shows what insurers and reinsurers have paid globally for natural catastrophes and man-made disasters over a given time frame. It shows when we face the peaks of the losses, all concentrated in the last 15 years. We also want to observe how insured losses move across regions, across perils, to see whether it's possible to identify any trends amid the interannual variability. And in fact, for example, we did see the increase in the wildfire losses before the record losses of the last few years.
So this slide also tells us that at least 70% of the losses are originating from weather events. Hence, climate change is bound to affect the great majority of our cat losses in a way or in another. Next. Another reason why we do this is to monitor the protection gap, which is the difference between economic losses and insured losses, to support the message of closing or narrowing the protection gap of the industry, part of the industry business proposition. And is also one of our the foundation pillars of the research of Swiss Re research on global resilience, part of the commitment of Swiss Re to improve global resilience. But let's try to concentrate on what happened in 2019. Next. Thank you. So following two costly back-to-back years for natural disasters in 2017 and 2018, losses were certainly lower in 2019, even below the 10-year average. And the reason was because the lack of severe hurricane losses in the US. Needless to say, the peak years for us normally correspond to costly hurricane seasons. This was the case in 2005 and in 2017, mostly. Another feature of the year is that the Earth continued to warm up. 2019 was the second warmest year on record, and now the last decade was the warmest decade on record. New heat records were broken, were set in many regions, including France. In addition, while the previous 2 years triggered a widespread reckoning with the climate change risk in the world, 2019 added an acute sense of urgency for climate action, which takes me to the next question, to the next slide. Is climate change responsible for the rise in weather-related losses? Well, let us say that it is difficult to say for sure if a specific weather event was made more likely or more severe as a result of climate change. The processes of how a changing climate impacts the frequency and severity of natural catastrophes are still not fully understood. It's still very difficult for us to distinguish between the natural climate change, the natural variability, and the anthropogenic climate change due to the greenhouse gases emissions. Sometimes these two counteract each other. Sometimes they play together, leading to an even stronger climate signal. I will try to answer this question with the events of 2019. Next. Let us start with the tropical cyclone North Atlantic risk, Hurricane Dorian, the strongest of the 2019 North Atlantic season, maintained category 5 winds for the longest duration on record. And for the Bahamas, we are talking about the costliest NatCat ever. This event, this hurricane, is also representative of the decreasing trend in the forward speed of tropical cyclones. What does it mean? And is this a signal of climate change? Next. We can say that this is consistent with some of the expected manifestations of climate change on this particular peril, the hurricanes in the North Atlantic. The decreasing trend in the forward speed of hurricanes allows the storm surge, for example, to occur over multiple high tides, and therefore multiplying the damage, and rainfall to accumulate over a number of days, and therefore with the potential to magnify the losses. Other events in the last few years showed other aspects. But the interplay between weather and climate at the basis of the formation of hurricanes is very complex for us to fully attribute this particular event to climate change. For now, we can say that climate change, natural variability, still dominates, but some loss components, which we call secondary effects, like storm surge, Hurricane Sandy, or hurricane-induced precipitation, for example, Hurricane Harvey, are showing some increase and are likely to play a bigger role going forward. Next. Equally, Typhoon Hagibis in Japan, the other part of the world, following back-to-back years of costly typhoons in Japan. You may remember Typhoon Jebi in 2018 and flooding associated with Typhoon Prapiron in the same year. In 2019, Typhoons Hagibis and Faxai further underscored the high vulnerability of urban regions to both typhoon wind and flood risks, despite the structural mitigation that had been built already in the 50s and in the 60s. Together with JB, they challenged the current industry views of this type of risk, and therefore prompting the industry to reassess the risk. Next. So the question is, are the heavy typhoon and flood losses of the last 2 years in this part of the world the result of climate change? In reality, we don't see any particular sign of increased activity. activity. No significant long-term climate change trend for typhoons activity in Japan, in the Northwest Pacific, but we see strong natural multi-decadal variability, which means natural variability. Hence, the heavy losses in the last 2 years were rather due to underestimated exposure.
Hello,
Next.
yes, hello.
Hello?
I'm fine, thank you, Ellen. Is it around just yes? Yes?
Hello, we can go to the next slide. Next slide with Cyclone Idal in Africa devastated the coastal town of Beira in Mozambique and also the surrounding agricultural land during harvest season. It also affected the neighboring countries. 2 million people were left homeless, triggering a reconstruction process which will last several years and will mostly be paid by international aid and local communities, given the high protection gap. Now, there are some signs of increased cyclonic activity in the area, but rather the devastation from Idal was made worse by vulnerability. Many low-lying cities and towns are more vulnerable than others to sea level rise. And some poor countries are located where actually they might experience more of the negative effects of climate change. Next slide. And of course, we do know that the poor in general lack the means to prepare themselves for disasters already today. In fact, we compare here Mozambique and Netherlands, for example, a country which is faced with the threat of sea level rise and also subsidence in the same way as Mozambique, but which is at the forefront of climate adaptation. Going forward, local adaptation measures will make a big difference. Next slide on the wildfire hazard. So after 2 record losses years in California, wildfires devastated this time the eastern Australia as never before in what was the longest and most destructive fire season ever. The chart on the right-hand side of the slide, if you can click again, shows the dramatic increase in insured losses from wildfires in the last decade. Now, we do know that wildfires are an ever-present hazard and an essential part of the renewal process of forest ecosystem in the world. Every single day in the world there are wildfires. But so is the increased activity or increased losses of the last few years a sign of climate change again? In this case, we can say that with a high level of confidence that climate change is fueling wildfire risk, for example, in Australia, but also in California and the world over. The result is of a few attribution studies already. But even in this case, the heavy losses of the last few years were made worse by the increasing exposure and the wildland-urban interface, where houses and forests meet. Because of this, there is a greater risk of losses of events of these fire outbreaks of this magnitude to become more frequent. And that is even without a warmer and drier weather. Next slide. In fact, today, the majority of the trend of increasing losses from weather risk has derived from exposure accumulation in the form of human and physical capital, which in turn has resulted from economic development and urbanization. As these images dramatically depict, just have a look at the image on the left in Florida, for example. A century ago, we wouldn't have talked even about a natural catastrophe there. There wouldn't have been a catastrophe to talk about. Today, of course, not only we will talk about a catastrophe, but a very costly one given the exposure. So this is to say that climate change, that is human-induced climate change, is only one of the many variables in a dynamic risk landscape in a complex interplay of many factors. The biasing the historical loss data sets of all the macro variables is actually an active field of research, a research that is trying to isolate the climate signal component, if any, among all the others. For sure, we know that climate change is the most complex variable and one that comes with a lot of uncertainty as to its timing and impact. So overall, we said there is no quantifiable signal of climate change on our data set, but that does not mean that there isn't any. We know that in a warming world, the patterns of severe weather are changing, even though we cannot prove how much of them is caused by climate change. No proof of climate change is not a proof of non-climate signals. So to sum up this last slide, some effects of climate change are already evident today. For example, the frequency and intensity of torrential rainfall events are now increasing because a warmer atmosphere can hold more water, which may result in damaging pluvial floods. Sea level rise driven by a combination of higher ocean temperature and melting glaciers may exacerbate storm surge and coastal flood events. Longer and more frequent heat waves may trigger bigger fire outbreaks, as we saw in Australia and the previous years in California. So for some of these perils, droughts, heat waves, wildfires, the link with rising temperatures is more direct. Their physical theory, numerical modeling, observations all converge in proving that there is an increase due to rising temperatures. For others, as we saw, the hurricanes, the link is, or typhoons in Asia, the link is less clear and the level of confidence is lower. However, climate change is still likely present, but the outstanding questions are its nature and magnitude, and to what extent it is already affecting the losses for these particular perils, as we said, hurricanes or typhoons. I'm hoping that despite the problems that we had with the audio, the presentation was clear enough. You will find the key takeaways, which I summed up already. I'm hoping that you were able to follow despite the issues we had. And the audio was clear enough for all of you to hear us.
Thank you, Lucia, for this very insightful summary of the Sigma report. Do we have any question on the line to Lucia right now? Des questions pour Lucia? Maybe one question that we have received in advance in preparation of this call. Lucia, how can companies prepare for the effect of climate change, according to you?
The companies, societies, communities in general, of course, we need to continue our transitioning towards the low carbon world, which is a long-term goal designed to increase our long-term resilience against this risk. Which is a systemic risk, exactly like the pandemic. You know, we can derive a few lessons, for example, for the pandemic. Both risks are systemic, they cause physical shocks, and they're not stationary, meaning that in the past probabilities do not tell us much about what will happen in the future. And therefore, the only way going forward is that we need to move towards a low carbon world. And in the meanwhile, we need, of course, also to adapt, to adjust. We saw the example of Mozambique and Netherlands, two countries which are at the opposite end of the spectrum when it comes to local adaptation. And in fact, when disaster strikes, as we saw in last year in Mozambique, the consequences are devastating.
Okay, Thank you, Lucia. Maybe one more point that will probably link to the other portion of the presentation. You mentioned in your key takeaways that weather risk remains insurable. What's your take on this? How do you think it is really still insurable, considering all the information that you just shared with us?
We think that weather risk remains insurable, and that is due to the short-term nature of property insurance business. Each year, we can always adjust our view of the risk, as it happened, for example, for the typhoon risk and flood risk in Japan. Of course, going forward, that will not be enough, because the past is not a good indicator of the future, and therefore we will need to work towards including also the long-term trends, climatic trends in our models. But for now, we can say that climate weather risk remains insurable. I'm sure my colleagues would like to say also something about this, since they propose solutions.
So, yes, maybe on va passer à la deuxième partie de ce webinaire. Je vais présenter brièvement nos intervenants. Yann Bachmann, qui est responsable de l'entité Innovative Risk Solution pour la partie IMIA, et Martin Hotz, qui est Head Parametric NatCat et qui est responsable de la tarification et de la structuration du portefeuille Swiss Re Corporate Solutions sur les paramétriques NatCat. Jan, Martin, the floor is yours. I will change the slides right now.
Thanks, Cami, for the introduction. Can everyone hear me?
Yes.
Perfect. Okay, so good afternoon, everyone. I will do a quick introduction to the world of parametric insurance products, and then I will hand over to Martin Hotz, who will put the focus on NatCat, parametric NatCat covers. So just a quick repetition for those who are not that familiar with parametric insurance solutions. So let me start on that slide on the bottom. So we all know how traditional indemnity-based insurance works. So basically we have an event happens today, tomorrow our client realizes there is a loss out of this event, and then usually a lengthy claims assessment, submitting, reviewing process starts, and a couple months, sometimes even a couple of years later, you meet each other in front of a tribunal or a court, unfortunate, and then you agree on a specific lump sum, which is very often not in a direct correlation with the loss you suffered a couple of years ago. So that's traditional insurance. I'm not saying that we don't need traditional insurance approaches anymore, but we have a more advanced approach, which goes to the parametric insurance. The parametric insurance, we try to find parameters our client's business is depending on. So if we have an event today and tomorrow we see that the parameter, or which is traceable on an index, reacts after this event, we know exactly what does that mean for our client. And as soon it goes down or even up, depending on how the cover is structured, we know they're suffering, and suffering is equal to a loss payment, and we are happy to pay out. If I say happy to pay out, we are very proud to tell you here that we usually pay out with a max to 30 days after the event has happened. So the big advantages again is the speed of the cover from the event to the payout. It's fully transparent, so everything is pre-agreed because it's depending on this index, so you know exactly what you will get in case of an event/loss. And the flexibility point is that you basically can use the money which you receive, the funds. It doesn't matter if it's just for the physical damage or the business interruption. So you have the entire flexibility to use it for, or to cover your costs you had at the time when you're suffering. So next slide. How does that look in reality when we apply this product? So we differentiate between two different categories. So number one is the parametric products based on natural catastrophic events. and the second one are the let's call it the non-weather, non-net cat events. Just looking at the first one, so there the typical net cat events we all are familiar with. That's, for example, wind. There we have a two different type of approaches, and Martin will tell you more after it. So number one is the storm, that's based on the intensity of a storm, and the second one is the category. So basically it's based on the category of the windstorm. The same concept applies for earthquake. So we have one based on the intensity, another one is based on the shaking magnitude. Then goes next is flood, drought. So what is measurable there? We all know river levels, for example. It was about 2 years ago when we had this very dry period in Europe. All the rivers were down, and a lot of our industries were suffering due to having access to the water connections or the river connections. And all the rest on weather, so that goes into rainfall, temperature, wind, wave action. If I say wind here, it's especially for kind of wind farms. It's not enough wind or too much wind, and so on. The non-weather, quickly, that's not the focus of today's webinar, but happy to have another separate one on that. So these are parameters non-related to weather. For example, for the leisure industry, there is an index called revenue per available room. So this index is a public index used for entire hotel or leisure industry. So if you have an event, for example, like terrorism event, then you can see that this revenue per available room will most likely react. So it's a perfect proxy to structure a parametric cover. Same applies for footfall, the density of footfall, how many people are situated in a certain predefined area. Goes over to airport closure, active terrorism, we talked already, regulatory shutdown, loss of license, production indices, where we can say, okay, we have a fixed volume of production of one of our corporates to be insured, and if this volume drops due to an event which is insurable, we can see that based on an index, and leads already to the last point here, which then could be predefined in a predefined BI amount to be paid if the event happens. Okay, that's in a nutshell. I'm happy to hand over here to Martin.
Merci, Jan, for that introduction. And on the next slide, let us take a quick look at how a parametric natural catastrophe, or GATNAT in the French market, can be structured. And for such a contract, essentially 4 sections are sufficient. The first section is that a location, one or several, is being defined. That location can be a pin on the map, it can be an area, and in combination with that location, the second section is that for that location, a limit specific for that location or area is being defined. So it represents a value as an upper sum insured for that location. The third section in the contract then is a data provider that is an independent third party, often a government agency, but it can also be a tech firm, company who reports the specific natural catastrophe event from happening. So the data provider is sort of the referee in this, and they declare whether the parameter, as summarized in the 4th section, the payment scheme, whether that parameter did happen. The parameter can be the wind speed, the category of a storm, the magnitude of an earthquake, the height of a river. So ultimately, a parameter that is linked to the loss the insured operation is suffering from, and if that parameter is a proxy for that loss, and the parameter can be underwritten, then it's a suitable parameter for a contract. And then through the combination of location, limit, independent data provider, and the payout scheme, the indemnity follows as a result, and the payment is made very quickly on the basis of having a pre-agreed valuation, giving us the transparency, as Jan has mentioned before. So looking at this in practice on the next slide, is a location can be as simple as an area, or in this case, if we click next one more, a circle around my location of interest. And when the independent data provider reports that the center of a storm was crossing the circle, then as we see in the animation, we can say, yes, the first condition was met, the storm track did cross the area. The second condition was likely also met, as the storm was of a sufficiently high intensity, and due to the concept of the pre-agreed valuation, the contract qualifies for a payout. And as the parameter is typically reported within a few days of the event happening, the payment really can be made very quickly, often at the time when loss adjusters are not yet in the area. And this really enables corporations to get back on their feet much quicker and to use these funds for rebuilding efforts, cleanup, emergency expenses, and the like. Now, there's other ways, and in our way also smarter ways to structure parametric wind solutions in this example. And we have an approach whereas no boxes or circles need to be drawn. The advantage of that is that when there is no box or circle involved, the scenario that a storm center misses the box but still causes damage, that scenario does not exist. And also the wind speed at the location of interest, be it an owned location, be it a third party point of interest, critical infrastructure, etc. That wind speed is the best proxy for the damage that is resulting, because infrastructure or assets in general, they are designed to withstand a certain wind speed at that location. So working with that wind speed at that location allows for a parametric contract that is a good reflection of the expected loss levels following a storm. And there's no limits to how many locations can be covered under one such contract. It can be one, it can be hundreds. The concept is a pure replication of the concept shown on the earlier slide. Now, the big question is then, who is capable of reporting wind speed for example, hurricanes in the Atlantic for every point on the map? We work together, as we see on the next slide, with a company named RMS H-Wind. They are a division of RMS Risk Management Solutions, who are widely known in the insurance and reinsurance industry for their NatCat models. RMS H-Wind, they have a proprietary technology where they combine measurements for several dozen measurement networks, airborne, seaborne, even spaceborne, and they combine all these measurements into one seamless wind footprint that tells us and the insured the representative wind speed at any point on the map. And that wind speed can be taken for the settlement of a parametric hurricane policy, for example, for highly vulnerable beachfront hotels, but also for infrastructure assets, transmission and distribution line grids, points of interest. So when a hotel is critically dependent on a nearby airport, seaport, the attractiveness of the area in general, and these are all examples where parametric NatCat solutions can fill in for a traditional policy, which may not address all situations that can and will arise following the passage of a strong storm in an adequate manner. So to wrap this up, the possible areas where parametric solutions can be considered are generally clients, corporations that face risk in high NatCat exposed areas due to earthquakes, tropical cyclones, flooding event, be it riverine or coastal, i.e. storm surge driven. Parametric solutions can be a good supplement to traditional insurance, to infill deductibles, to address exclusions, or also address sublimits, to address situations where the business interruption is non-physical in origin, for example, the loss of attraction to an area, and when in general traditional NatCat insurance doesn't fulfill the need, because the need may be for having a very fast and hassle-free payout with very little bureaucracy involved. And that's one of the big pluses of parametric solutions. And the fifth and last point, cover otherwise deemed uninsurable risk. Uninsurable or often not included could be beaches belonging to a hotel. It could be golf courses that are often excluded or sublimited. Transmission and distribution line risk, which in a lot of areas is excluded or heavily sublimited, and the list goes on from there. So many thanks from my side also for dialing in. And with that, checking the watch, we have decent amount of time for questions. You can also ask them in English. I take the in French, pardon me, I wanted to say, and we might respond to them in English then. Thank you.
Thank you very much, Martin. Thank you, Jan, for this detailed presentation. I hope it will give you a good overview of our feasibility and capacity in that area. I will pause here for a while to allow our participants to ask questions verbally. Si vous avez des questions à poser oralement, je vous laisse la parole. Or maybe to start with, maybe that's a question for you, Martin. The hurricane season has just started, beginning of June, in the Caribbean region. Is this still a risk that you are willing to engage in, and do you still have some capacity available?
Very timely question, Camille.
Yes.
Yes. So the hurricane season in the North Atlantic has been off to an active start so far. First or second week of June, and there's already 3 named storms on record. The climatologists know that an active start early in the season has little correlation with the rest of the season, so we are not alarmed, despite all forecasts also pointing towards an active season in the Atlantic. I think the past few years were just a reminder once more that this part of the world has always been and will always be very exposed to strong storms. And in some years, due to a lucky combination, the strongest storms stay offshore and cause not much damage, while in other years, it requires only but one strong storm at the wrong location, and a large economic loss is the result. So I think with strong storms being a rare occurrence in general, as Lucia has mentioned before, we do not see any general trend in the probability of seeing strong storms, because there's only so few on records. The data is very, very sparse, but the ocean temperatures are high. So there's a lot of energy and fuel for these storms to gain strength. But yes, we are open for business and will remain so.
Ok, merci Martine. Je vois Olivier, Monsieur Balken, que vous avez une question. Vous avez levé la main. Et vous êtes en mute. C'était peut-être une erreur. Maybe one more question. When it comes to paramétrique, pardon, il y a une question de Monsieur Franck Chanel, peut-être, que je vois aussi une main levée. Si vous voulez prendre la parole.
Yeah, should I speak in English?
Maybe so. Thank you.
Okay.
Comme vous voulez.
I have two questions. The first one is, how long does it take to make a study to set up such a coverage? First question. And second question, you mentioned at the beginning of your presentation regulatory shutdown. And I would be interested by knowing what kind of trigger you can use in this type of situation.
Merci, Frank. Let me address the first question. So the settlement of a parametric policy is very accelerated, but the structuring takes more time depending on the complexity of the situation. I think the more clarity there is on what situation shall be addressed, then we can sometimes turn around within a week or two for a first conceptual proposal, and it then evolves from there, depending on how many iterations are taken, how much fine-tuning there is, but often within a few weeks for a first concept, and then sometimes it evolves from there over a couple of months, but sometimes within 1 month we are ready to bind a contract. And Jan, did you want to take the second one?
Yeah, so in respect of regulatory shutdown, regulatory intervention, so that's basically the underlying trigger, let's call it that way. And of course, we need to make sure that we understand why a regulatory authority is coming to this decision, why to close a production facility or a production line or a specific product down. And if this process is fully transparent and clear for us, and we feel comfortable to take the risk on board on a risk transfer basis, yeah, that's how we usually proceed. Samples there are coming from transportation samples. What we did as transportation authorities, blocking down specific routes. We did it in the pharmaceutical industry for specific products or specific product lines. And yeah, that's more or less what I can add to that. Does that
okay, thank you.
Okay, thanks.
Maybe you have seen the question from Olivier relating to the pricing of parametric cover and how does it relate to traditional insurance policies?
I have seen it. Thank you. Good question. I guess for perils like earthquakes that are a low frequency, potentially high severity peril, prices as a percentage of the covered limit might start at 1 to 2% rate on the limit, depending on the riskiness of the location, as primarily the price is a function of the probability of the cover event happening. There are some places in the world where trying to reduce the premium to a very narrow amount may not result in a satisfactory solution. And taking the Caribbean again as an example, that some places are of an exposure where the probability of a covered event happening is so high that I would consider it somewhat unjust. Try to lower the premium to maybe just 2% because you could then assume that only once in 50 or once in 100 years this contract will make a payment, but the probability of having a hurricane in this part of the world is much greater, and this would only result in frustration. So generally, for meteorological perils, storms or flooding, it might be in the higher single-digit rate on the limit, but again, very much a function of what is the probability of this specific area seeing the described event.
Maybe to, pardon, one more question from Patricia. How mature is the captive solution for parametrics, and what are the arguments? That is, benefits compared to traditional insurance covers. What's your take on this?
Let me take that one, or let me take the first bit of the question, the captive question. Of course, captive involvement, it's always possible. That's not a problem for us. Happy to do so, to share the risk with the captive rather than with co-insurers. No, that's just a side comment. No, definitely not a problem. And self-financing is always a big topic. And the second part of the question, Martin?
Benefits compared to traditional insurance cover.
That what I tried to mention at the beginning, that one of the big advantages is the flexibility of the parametric cover has, because you get not paid for this specific item which got damaged. It's an amount you get paid out, which should hopefully correlate, or as much as possible correlate with your financial damage you suffered. But your financial damage is usually not just in respect of a physical loss. It can be non-physical, it can be fully independent, that's non-physical damage, business interruption, as we all know. It can be loss mitigation expenses, extra expenses you would not get covered on a traditional basis. So it's the full amount you receive. That's one of the big advantages, definitely.
Maybe one more question when it comes to comparing the two solutions. Is it possible to combine a parametric solution with a traditional one? And if so, in what type of cases?
It's a question we often get. It's typically not done to explicitly reference traditional property damage business interruption policies in parametric contracts, because in our understanding, part of the benefit of the parametric contract is to address all these items that are left behind by the traditional coverage, and that it's therefore meant to complement the traditional coverage and complement in a quick and hassle-free way. And trying to design a parametric cover that is maybe sitting on top of a standard indemnity cover would remove the element of speed, because first the traditional cover needs to be adjusted, and it's being adjusted based on the traditional wording, which does not, or which does have its exclusions and sublimits and does not address the all-in loss cost. And in exactly because of that notion that the parametric does address the loss with a much wider scope, essentially all direct and indirect loss is in scope of the parametric contract. We deem it to be a good complement, and we do take into account that it should not be enriching the policyholder but it does not make direct reference to recoveries from other contracts.
Thank you, Martin. Another question that came in the chat box. What is the maximum available capacity for wind? I suppose it might be different from region to region, but can you answer to this one?
For wind, it's depending on the location and also on the, I guess, the risk. The risk itself, is it a single risk? Is it a portfolio of risks? But broadly speaking, high double-digit US dollar millions up to 100.
Okay. And another question that came in, is it possible to provide a multi-annual cover?
Yes.
Okay, good, thank you. Another one, will we need a loss adjuster investigation for NatCat parametric claim? That's a good one, because it's the full interest of this solution, right?
Yes, so short answer is no, we don't.
Yeah. Okay, and in that respect, in the same ID, does the client need to confirm any proof of loss in case of an event?
It depends on the jurisdiction. In US jurisdictions, yes, a loss amount, at least of the payout amount that is to be expected, needs to be confirmed. In EU regulation, often such confirmation of loss is not required, as in the underwriting process, both parties pre-agree that when this event happens, as parameterized per the contract, the loss amount, direct and indirect, will be at least of that level. So on the theme of pre-agreed valuation, no such loss confirmation is required.
Okay, thank you very much, Martin.
And maybe to add, in those places where the confirmation is required, it is a very lean one-page document where a confirmation is made, so it does not come with dozens of pages of photographs and reviews. So it's very lean.
Okay. I see more questions coming in, but we are running out of time. I suggest I will take the additional question and answer to you directly via email or to give you some response to the additional question that pop in right now. I wanted to finish on time and thank you very much, Lucia, Martin, and Jan, for this intervention. I hope it has been helpful to all our guests, and please come back to us to learn more on this topic. Your contact entry points in France are myself and Sébastien Mendy also. Martin and Jan are very often coming to the French on the French market, and you have probably met them already in various meetings. So if you need to dig further on these topics, please reach out, and we will be happy to detail this risk and study further opportunities with you guys. Thank you very much. Have a good rest of the day. Bye-bye.
Bye. Thank
Merci.
you.
Bye-bye.
Bye-bye.